Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, here we are, Jim. It's Friday, and it's good to be with you.
President Donald Trump slapping steel and aluminum tariffs on U.S. imports except for Canada and Mexico, but it's temporary. He says it's all tied to NAFTA. This whole idea of protecting a certain business, does it work out for you?
Oh, it never does. There's always political pressures, but on this one, I didn't get excited about it because there's an election on Tuesday in the U.S. in Pennsylvania, which is old industry. So he was talking up tariffs. It'll probably help. But if you take aluminum, for example, of which I think something like 50-some-odd% of the aluminum that the U.S. uses comes from Canada. And if you turn that off, there's no way that the U.S. can replicate that production within the U.S. within, a decade or so, because aluminum takes huge amounts of electricity. And those plants that are in Canada, many of them are dependent upon hydropower. So, hey, I thought it was a game from the start. And he started to back off a couple of days ago, and because, the impact for the election was in. But we should stress, Jim, that protectionist measures, which includes tariffs, are idiotic. They're just terrible. But with a great financial mania we were in, when they fail, like in 1929 or 1873, all the ones going back in history, when they fail, the debt burden is such that you go into a very long contraction. Sure, the 3 to 4 year business cycle continues, but recessions would be severe and recoveries would be weak. So, but then you start to face, in each country, more unemployed. And at the moment, the U.S. is something like a 45-year low for unemployment. But and this bubble will eventually fail, and there will be a long contraction. So then what do politicians do when they're looking at unemployment in their own country? They will move to protect industries or sectors of the economy that have the most political power. It's inevitable. And there was a great bubble in 1825, terrific one, and it crashed, and then you went into a long contraction. And I'd have to look it up. I haven't looked up, but I will before I write something, is that, but I remember the title, where a massive protectionist package was brought in, and at the time, the newspapers were calling it the tariff of abominations. It was so bad. But it's the way human nature works. You get high unemployment in a country, a politician will be forced to try and do something about it, make it worse. So, and this traces all the way back to Rome, for example, when you go into a period of weak grain prices, and they would come up with below market rates of interest on mortgages to the farmers. If you had too many grapes, too much wine, they'd pay the farmers to tear out grapevines. And, of course, this is all was brought in on what they called in the 1930s the New Deal. So, hey, there's not... As a matter of fact, the best book on the phenomenon in Rome was published, I think, in 1938, and the title really grabs you. It's The New Deal in Old Rome. So, you know, there is nothing new in the marketplaces. So what's going to happen here, I guess, with this thing is they realize that the more serious side of the tariffs would not be applied in NAFTA, but there might have been some dumping coming in from China. But at any rate, so it's all part of a game. So it was the election, it's NAFTA, this sort of thing. And I think NAFTA should be renegotiated because it allowed, the original deal, of course, was put together by bureaucrats on both sides of the border. So it's a deal for bureaucrats. And then they left in the right for the central bankers to continue to depreciate currency, and Mexico and Canada were very good at depreciating currency. So that, you know, why bother with a deal if you're going to cheat on it? So any really sound free trade agreement between Canada and the U.S. and including Mexico, you got to prevent the cheat of the central bankers dropping the currency. So, but that may not happen. But I think Trump is right to reform, update the NAFTA agreement and try and make it a little more fair towards the Americans, but that's the main unfairness with currency depreciation. So, but it's a fascinating game. I've loved watching it. The stock market, which had got rather hot and heavy, not so long ago, you had sentiment figures very high, very bullish. And that disappeared very quickly. So we were talking about that yesterday, and sentiment numbers were lower. So this is then ideal for a rally. And for Bob, many investors around the world, as well as policymakers, the bluster about tariffs really was a bad threat. But as I wrote yesterday, there's no problem or threat of serious protectionist matters until you're into the next recession, when you would see higher unemployment. So then we're just back to looking at the markets. The dollar index is down a little today, so you've got a pop in gold and silver and crude oil.
We'll talk about those right after the break, Bob.
Indeed.
We'll be right back.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're chatting with Bob Hoye. So, Bob, the equity markets reacted quite negatively to Trump's talk of tariffs. Is that little period over now?
Yeah. The talk of tariffs is they will still have to continue working on the NAFTA deal, but that's all on the bureaucratic side. I found it much more entertaining just to look at the market side. So we are in the final stages of a great financial mania. And while the stock market in a financial mania gets most of the attention, there's the other performers out there, and you have what's going on in the credit markets. Now, in long-dated treasuries bonds or long Canadas, that got very excited in 2016 and up to a high in June, July. And at that point, speculators in long treasuries were convinced that U.S. interest rates would go down, approaching somewhere where German rates were, which were then 0 or minus. So the bond bulls then in North America were playing that the European rates would prevail, would eventually push rates down, but we did our technicals on it and thought that the U.S. bond market was less messed around with than the European. So we did our technical on and had technical excesses and decided that that was the major peak in the bond market in the U.S. And then if bond prices went down in the U.S. and yields went up, that would then feed into Europe rather than the other way around, which has been the case. So you've had, in the last few months, a breakout in yields for long treasuries from a long down channel since 1981, when long-dated treasury were trading at 15%, and in Canada, long government bonds were trading at, 19%? Hard to think of now. So that, in this little thesis we're working on, Jim, is bubble number one in the long-dated treasuries. Then the other bubble has been in low-grade bonds, where junk has been bid to the moon. Now that got very excited a few months ago, and probably working on a top, but it's not become a disaster yet. And then other phase of bubble is of course from the stock market, of which the hottest group was the Bitcoin stuff and the blockchain, and that really reached a climax in December. I think it was December 19th, when we were following the Bitcoin as representing the sector, and it gave a big sequential sell, and it hadn't done that in 2 years of checking back on the chart. So we assumed that, hey, biggest technical signal should be followed by the biggest correction in as many years, which it turned out to be. And the other one on that, Jim, was that we've been outlining that there's a long history of big speculative items reaching a crescendo in the December-January window, and we'd cited that gold, like in January 1980, when gold and silver were crazy, and then the Nikkei phenomenon with the Tokyo market, that peaked on the last trading day of 1989. So there was evidence that if you had something really hot going into Christmas, it could set a peak, which it did. So the question now, whether this for the blockchain stuff and is whether it truly is over. So we figured a number of months of churning around, testing, and up and downs, and that sort of stuff. And it'll take some time before it breaks down. Now, to have to resume, like in Bitcoin, that kind of speculation is highly doubtful, because as more and more people are understanding, the electrical cost of doing what they call mining is staggering amounts of money. There are been little headlines about in a certain county in New York State, they want to ban the use of them because they were using so much juice. I mean, the people were paying for it, but it was putting a strain on the system. So in any great speculative market, the academics have always said that the friction is in the cost of compounding interest rates. And with this one, you have that going against the speculation. So that then, just the cost of leveraging compels you to make sure that it's going up all the time. And then with the Bitcoin, it's the staggering amounts of electrical power being paid for. So I doubt that it would make materially greater highs. So even if you had, maybe favorable credit markets in May and June, and you can have, it would be positive for the stock markets. But you can get rallies out of the Bitcoin, but to my mind, that you could ignite another big wave of speculation, that it would drive prices to materially high levels, is unlikely.
Well, Bitcoin has fallen to below $9,000 US, and you're saying it may not climb out of that?
I don't think so. Some continued trading. But remember that in the credit markets, if you're in a speculative year such as we are, and on credit spreads and the yield curve, you can have a nice little positive seasonal for those coming in maybe April, May, and then the reversal. So let's give us into mid-year, where anything sunshine that comes into the credit markets would have run its course, and then you have to look at what can happen in the fall when you've had an outstanding speculative rush in the markets. And oftentimes the fall can be a period of heavy liquidation. So, but I think there'll be many parties to mid-year, and then after mid-year you're looking for the time when unsupportable positions get sold out. So that kind of works from year to year. You know, the old saying, sell in May and go away, has been around for generations, but also what's been around for forever, so to speak, is the seasonal turn to adversity in credit markets after mid-year. I think it's mainly driven by credit markets. So we'll see what happens this year.
We'll have more with Bob Hoye right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Bob Hoye. Bob, the Trans-Pacific Partnership, the TPP, was just signed, and Canada now is going to engage in trade talks with the South American bloc. Are big trade deals like this a good thing?
They are, but you still understand, Jim, that you've got bureaucrats talking to bureaucrats on this. So if any country, such as Canada, is truly interested in free trade, let her go. Just declare unilaterally free trade in every direction. Now, some people are going to get hurt and some people are going to do well. But if you want free trade, they should go for it. And throughout all of history, free trade has been a positive, because you get somebody like Canada, if you've got certain mineral deposits such as nickel, or, you know, great petroleum deposits, and you got other countries that don't. There's the concept of free trade. It's because different people can do different things and produce different products, or different regions have different products that are needed. So I cannot be strong enough in emphasizing that free trade is the way to go. And but even better is to get the bureaucrats out of it and have a free trade, all calculated with a sound currency that the central bankers can't mess up. It's a wonderful time, and it's not theoretical, Jim, because in the past, in certainly through all most of the 1800s and into the 1900s, until about 1910 or so, in England, the senior economy was on a gold standard, and it prevented dreamers or adventurers such as economists from fiddling around imposing their ideas. And the British economy did well, and the Commonwealth economy did well, and everything else. So there's lots of evidence that free trade is very good.
What about the tariffs Canada has on clothing imports right now? Obviously, we don't have a textile industry to protect anymore. Do these tariffs end up being just cash grabs by government? Yep.
And that's why often they don't want to let them go, because whatever money coming in, they see and they want it. But that's such an ancient concept where industrial Ontario was protected from industrial states so that people could make things in Ontario and sell them to people in British Columbia. So, and you pay all that extra freight and the lack of competition, so the prices were always very high. And then making that even worse as you go back to the 50s and 60s, when the people in government in Ottawa kept the price of crude oil artificially low. They just wanted to make ordinary life one happy, long throb of happy motoring, with artificially low gasoline prices. So, no, these dreamers fiddling around are always bad, and freedom is good. And you've got the struggle now going on between British Columbia and Alberta with, Canada's got to export the products. In this case, it's oil, but you've got a government in British Columbia that it depends on the Green Party, and they've got the leverage now, and they don't like pipelines, so they're messing things up, and it's messing things up for Alberta. So here again is day-to-day examples of trying to to make trade less free, even within the country. Oh, Jim, you're getting me too excited. It's Friday. Let's close it out.
Let's cool down those drinks on the bar for us.
Yeah.
Bob, thank you so much for chatting with us.
Hey, good to be with you.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet. Our YouTube channel is Talk Digital Network. Questions for Bob or any of our other guests can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.